Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market, so SPY hits a new all-time high today, but there's definitely a lot of tops up to the 302 level. So bears at least have something to work with where they have stop losses above that level, a bit of wiggle room to not get stopped out by any fake outs. But again, it is a very clear triple top at this point. If the bears are going to prove anything from this triple top rejection, we have to drop down and break 298.24, which is the lowest price of the FOMC reaction yesterday. If we break that level after a double top, it'll definitely be a shift in short-term momentum. For me, at that point, I then zoom out to the weekly chart and I will begin watching to see, can the bulls form a weekly high or low anywhere above 281.72. If that's the case, then the bulls will keep control. If we're going to lose 281.72, it's going to have to come with a lot of bear volume. The kind of bear volume that is higher than the 20-day average, the kind of bear volume that we saw on the August dump. That's going to have to happen. If it doesn't happen, we're going to look for a weekly higher low to form, even if we lose the daily uptrend. IWM pulling back today, closing down near the low. If IWM breaks the low of the FOMC reaction, that increases the odds that SPY can break the low of the FOMC reaction. So IWM is closer to doing so. 155.07 is that support level. I would still consider anything above 146 a daily higher low here after such a significant move up last week. But we did not get follow through. We did not confirm the breakout, and we're back down towards the low of consolidation. QQQ has a double top. 194.71 resistance, unable to get far over 194 today. And if we drop down and break the low of the FOMC, 190.11, it'll be a shift in favor of the bears short term. XLF did break resistance, but closed at the low of the day. Short-term support will be 28.19. So you can see pretty much for everybody, we're lining up with the same thing for the most part. We're looking at the low of the FOMC reaction as a key support short term. We have profit taking today and rejections from resistances in a lot of places. And that may just mean that we're in for some weekly consolidation. So again, hedging long-term portfolios, definitely a good idea up here, or potentially looking for bearish trades using stop losses. If you're in a bearish trade while we're still in a daily and weekly uptrend, absolutely have to have a stop loss above that all-time high. Keep in mind, SPY is going to open lower tomorrow due to the dividend adjustment. A lot of people are going to wake up tomorrow, probably myself included, pull up their chart and say, oh man, SPY's down big. When in reality, a lot of that will be the adjustment for the dividend. XLV, another one with a clear top, 92.38. We rejected from 92.28, and it's the low of the FOMC, 90.79, that the bears are going to have to break to prove short-term momentum to us. XBI, still in a very tight range. We've been trading within this range pretty much for the last 7 days. We have our support down at 81.73 and our resistance at 84.12, just waiting for a break of one of those levels for short-term clarity. The VIX here, we do have a bit of a lower wick, so 1350 was our low. We did drop down to a lower low, and the VIX, just like the opposite of SPY, we're looking to break the high of the FOMC reaction. 1580 has to break for the bulls to shift short-term momentum in their favor. Gold is still extremely tight. We have a double bottom down at 1482, and we have short-term resistance 1511. So again, pretty much just watching the range of the FOMC as the key resistance level. 1512, 1511 is a double top, and 1482 is a double top. So I'm looking for a break of one of those levels. And if we don't get a break tomorrow, we should head into next week and look for a break first thing. And there may be some opportunity there. If it's a bull break, we zoom out and say, all right, our weekly higher low has been established, and we'll then be looking back up towards resistance. If it is a bear break, our weekly higher low has not been established, and we will test the weekly exponential support in the 1470s, actually 1460s. Silver's also in a tight range. The bulls have to hold the low and break resistance of 1807. So bulls want to hold 1749 and break 1807 to shift the short-term momentum in their favor. So what I am liking about all these setups that we just looked at is the key levels are in a short-term range. They're in a 3 to 6 day range, and we're looking for a break of that range to indicate short-term momentum. The burden of proof remains on the bears, but we are seeing the setups where we're saying, okay, bulls are tiring out a little bit. Let's see if the bears now have any punchback. Looking at gold miners, key resistance 33.49 on NUGT. And again, if we look at the 4-hour time frame, that would be a clear trend change. Low of 28.11, high of 33.49, higher low at 29, and the bulls have to see a bull break over 33.49 to change that 4-hour trend. And again, it's important to be watching, obviously, what the precious metals are doing, but if NUGT breaks 33.49 and gold does not break 15.12, I take that bull break with a grain of salt. And there's been 2 distinct times in my memory of the last 2 months where we've seen the miners do their own thing in both directions. One time it was a lot more bearish than it felt like it should have been with what gold and SPY was doing. And the other time more recently, it was a lot more bullish. And that was Tuesday, I believe, this week. But the bottom line is, for me, it's the same thing that I do with SPY. If I'm looking at a SPY key level, and if SPY breaks the low of the day, and QQQ breaks the low of the day, and XLF does not break its low of the day, I am less of a believer of that bear move, because 2 of the major components of the S&P 500 are not following to the downside. So if the miners get a break, whichever direction, and the metals aren't doing that same, or aren't seeing that same break, then again, we take it with a grain of salt. We want all the wind at our backs if we're going to be looking for significant follow through on any move. Oil. Daily higher low is established now, down at 57.64. So we got a shift in momentum. The bulls showed up this morning, gave a lot of it back, and they're trying to change the 4-hour trend at this point. 57.67 is our low. High of the bull move is 59.49, and bulls are trying to form a higher low compared to 57.67 and break 59.49 to change the 4-hour trend and see the daily higher low established. If that happens, due to the size of the pullback, we will just be looking for a lower high compared to 63.33 and a tightening range to form on the daily time frame into next week if the bulls can confirm that 4-hour trend change. Natural gas, we gave 2 scenarios in the video yesterday. Scenario number 1, bullish reaction to the inventory report and another daily bull flag. Scenario number 2, bearish reaction and the potential of a daily head and shoulders pattern. So the hourly RSI got more beat up than we've seen in a long time. Left shoulder, here's our head. So if we hold 251 support, which would be the neckline, we would look for a bounce and a lower high to form compared to 2708. And then we'd look to potentially roll over and lose the daily uptrend and look for weekly consolidation to form a weekly higher low. We're forming a bearish reversal candlestick on the daily time frame. If you ask me, would you make a bearish entry on a break of 251 support tomorrow? No, we're too extended. The 4-hour RSI would be right into oversold conditions. The hourly RSI would still be oversold as this weak bounce is trying to play out right now. And that would be too extended for me to like the risk to reward of that entry. Now, if you ask me on a bounce, then would you make a bearish entry after a bounce? Yes, the RSI levels cool off. I would either look to top fish 2708 resistance, or I would patiently wait for a loss of the daily uptrend to look for that bearish entry. So a lot depends on what the short-term time frames are doing when key levels are broken. And in this instance, too extended to the downside for me to play a bear break of 251 in this specific example. So hope you had a good day. We'll check in over the weekend and see how we close out the week. Bears need a nice solid red day tomorrow if they're going to follow through with these resistance rejections and these setups that do look a little bit like the bulls are a bit tired. Keeping in mind the weekly time frame for SPY, the last time we saw weekly consolidation was the August dump. From there, we traded sideways and then saw the bull break. So we haven't consolidated on the weekly time frame in about 6 or 7 weeks, and it would be a lot more comfortable for the bulls if we got a convincing new all-time high before consolidation, because if we consolidate, you're going to see it all over Twitter and all over social media talking about double tops, and that will be true. There'll be double tops to be aware of that could potentially indicate some short-term tops. So it'll be interesting tomorrow to see if we get that red day, and then that'll certainly be the weekend narrative that's discussed. Thanks again. Do good things. We'll see you on the weekend.